The second quarter earnings season is just about to break. We've got US banks kicking things off on the 13th of July, and thereafter a great deluge comes through from many of the big sectors coming through in the next couple of weeks. Then, of course, at the back end, we get the likes of the mining companies and the oil companies coming through. So there's a whole range of interest due to break across our terminals over the next few weeks and opportunities to trade these markets. Well, to join us now to take us through some of the highlights that he's expecting is Chris Bailey from Financial Orbit, who joins us now on camera. Chris, it's good to have you once again with us talking about this particular area of the market. And I know that the Q2 earnings season could throw up some really interesting points. From a big picture point of view, what should we expect?
Thanks, Jeremy. Yeah, absolutely. It is going to be absolutely fascinating because let's face it, expectations are already very high for earnings growth. We've had clearly a marvellous stock market move in the States over the last year, 15 months nearly now. So expectations are very high, but the question is what's already factored in? As always with markets, you've got to look forward. And the reality is if people aren't and companies aren't actually hitting fully what people are expecting, not just for the second quarter, but also for the rest of this year and into 2022, then maybe shares are going to be a bit volatile. So it's going to be a big and important month. In fact, about 6 weeks' time. So in terms of multiple different areas, going to be absolutely fascinating.
Okay, we've got a lot of backstories here as well, because there's big questions about inflation. Is it transitory? Is it becoming entrenched? We know that the inflation numbers we've got are beginning to appear above some of the central bank's comfort zones in the US as well, as much as anything else. Talking about the US, we've got the US 10-year yielding now 1.25%. Now, this is down a heck of a lot since the last quarter's earnings. What are all these factors going to mean for the outlook for companies? Because it's not just the fact that they're reporting these figures, it's the outlook as well that's important, isn't it?
Precisely, it is. I mean, there's already expectations for around about a 60% year-on-year earnings growth for the second quarter. Now, that seems fantastic, and in most normal quarters it would be, but clearly we're sort of contrasting with, let's face it, a different time last year because of the COVID-19 challenge and everything. So no surprise to see that 60% expansion increase of earnings for this quarter. As you say, far more important is going to be not only can companies hit that level, but also what they're saying about some other trends for the next couple of quarters. I would say there's really three very important ones. The first one is, where are earnings growing next? Are they going to continue to expand, or is this the maximum people are going to see? Second aspect is undoubtedly, where is your cost base going? And it's not just inflation. Inflation is always important. As you say, it doesn't seem to be worrying the bond market at the moment, but my feeling is inflation surely is going to become a bigger issue over the next few months. So therefore, cost control, inflation, ability to offset that is going to be very important. Third area, as you say already, comes with the bond market. And the bond market's always a big influence on the equity markets. Quite rightly, the two work together and live together. But reality is, what does it mean in terms of what companies can do in terms of raising money, how they should be valued and everything else? How should investors be allocated? So there's multiple things going on. By no means is it boring out there. It's going to be a fascinating and important time. And let's face it, there's even broader considerations as July turns into August with Jackson Hole meeting for the Federal Reserve as well. So lots of things for the equity markets to be thinking about.
Yeah, let's take a look at some of the big sectors then. I want to kick off with banks because we always start that off because they really do begin in earnest. I think it's Tuesday 13th when the big ones kick off. We've got JP Morgan, we've got all the big ones, Citigroup, Bank of America and so forth. Thoughts about the sector?
There's three really big issues here. The first is that, yes, dividends are starting to come back, and there's already been talk about what companies are going to do regarding dividends or other kind of returns they can give, buybacks of shares and related. That's clearly already being shown as being allowed for them to do. So that's a good move for the banks. As you say, the second issue really is, how do you value banks at a time when inflation levels are maybe changing and bond yield levels are unbelievably low versus perhaps people's expectations for how this year might progress. So that always causes some difficulties for bank valuation levels. I think the third angle really is, where do the banks go from here? Last quarter, they talked about issues such as lending money for mortgages and related starting to be a bit disappointing. And in fact, actually, general lending levels were also not quite as high as many of the banks thought. perhaps because of some of the help that the government has given in the States, and let's face it, here in the UK as well, in all sorts of places, in terms of flow of company sort of information and new amounts of profitability and everything else that they can give assistance with. So the need for the average company to lend money has actually gone down. So what challenge is this causing for the banks going forward? It's a big debate. The banks, as you say, they start with JP Morgan, which has that wonderful kind of range of opinions and views across different sectors, both consumers as well as sort of the financial markets and related. But it's when you start looking at things like Goldman Sachs or Bank of America that you certainly start to see whether some of the movement in financial markets is also having an impact on this sector. Banks have clearly been a benefit from indices going up. That tends to lead to more trading. The big question is what happens next over not just the summer, but into the rest of this year. So lots of things going on. The banks is always the place to start and always sets very good insight for the rest of the sectors to talk.
One of the interesting points you mentioned there is about inflation. And of course, inflation in part is driven by this rise in raw materials prices that we've seen some big gains across base metals, precious metals, and of course the oil markets as well. And of course, this leads us into one of the big consumers of this, the industry. Like if you look, the companies that make things, and this is beginning to steer us into higher prices. You've got higher input prices, you've got factory prices rising. What about the industrial sector? Is that going to be affected? Are we going to see more of the effects of this, do you think, in these second quarter earnings?
This is the key question for all industrial companies. In fact, I'd actually expand it to actually all consumer companies too, because again, that's an area where input costs is hugely impactful, and also what it means in terms of what you can sell to your consumers or whomever, whatever people you're supplying bits of insight for. So consequently, this area is sort of hugely impacted by this. So certainly when I see where the industrial companies are going, sort of like the Dow Chemicals of this world and related, what they're thinking about pricing capability and underlying demand is going to be highly impactful on not just their profitability, but also where they're giving their full year guidance for 2021 and into 2022. So it's going to be a very big impact. But I would expand it and say, what are companies such as Kraft Heinz or something like Coca-Cola, what are they saying in terms of not just their own underlying costs, but also what people are doing? You know, are they seeing American and global consumers actually continuing to buy things or not? And what are they paying and related? So for all of these companies, it's also always a massive impact on them. Is it going to be particularly important this year? Absolutely, because let's face it, most of those shares have performed pretty well year to date. Been a wonderful US stock market. So as a consequence, to increase that going forward, you've got to keep on performing. And that's the big debate out there. So no doubt analysts will be saying, well, what do not only these numbers say, but what are the companies saying about prospects for the next couple of quarters for their full year 2021 guidance levels?
It's interesting, isn't it? Because when talking about these input costs, I said raw materials, it's interesting to look at some of the miners because they're having to grapple with these higher prices. They've got to pass them on. But I know that some of the reasons why we're finding these higher prices is because the cost of getting some of these minerals out of the ground is becoming so expensive. We are now beginning to find it more difficult to find new resources. And of course, a lot of money has to be put up front with these explorers to bring the stuff out of the ground in the end anyway. And of course, the setting up a mine is so very expensive these days. What about the mining sector overall? Is it a good place to be at the moment for a trader and investor?
It's certainly been an area which has got a lot more interest from the average investor over the last year or 18 months. And that's certainly been benefited by things such as not just rising copper prices or gold prices or related, which have increased in general terms over the last year or two, but by the fact that people have said, well, maybe there is going to be a greater emerging market interest in these areas too. And perhaps this is a way that we can be exposed indirectly to that trend as well. So it's no surprise to see something like a Freeport-McMoRan, which is one of the bigger American mining companies, actually in terms of their share price performance has been marvelous over the last year. I think the shares have tripled or quadrupled or something like that. Quite remarkable for one of the sector's biggest players. But that's all to do with the fact that they've made some progress with their profitability and some of the underlying mines that they're exposed to. But the fact is the average American investor has said, oh my goodness, we've got to have some exposure there, when perhaps If we push it back a couple of years ago, they had no exposure to that area as well, preferring technology or many other areas. So there's been a couple of points of interest. It's going to be a big focus point for this quarter, mainly because now people are saying, well, what's going to happen next? Are you still going to see strong Chinese demand and hence good things like demand for copper or gold or other mining sectors? What they're going to do about things like higher costs? It's quite interesting. I saw some data from different sectors saying how much their wages have gone up over the last 6 or 9 months. And the mining sector was right near the bottom of that, which surprised me a little bit, but perhaps is indicative of the fact that perhaps other sectors have been more impacted by things such as rising wage levels. So that's certainly something to focus on too. But yes, for the US market, mining is a relatively small area, not as big as it is perhaps in the UK or in Australia. But is it important? Absolutely. And certainly the impact on other sectors, as I said, some of the industrial sectors or some of the consumer sectors is important too. So yeah, mining tells you a lot about that underlying world that we live in.
Something aligned to another issue that the mining sector is having to deal with is the oil sector. Both mining and oil are having now to deal with this new idea that we should be more mindful about, one, what we're taking out of the ground, two, how we're doing it, and the longevity of investing in these mines, and ultimately might find a problem with the green lobby, because there's a lot of an increasing amount of people that are becoming interested in finding ways to maybe power our vehicles or light our homes in a way that is more environmentally friendly. And this is having a big impact, I know, on how we get some of the stuff out of the ground in terms of the mining companies, but also not just how we're getting the stuff out of the ground for the oil companies, but the actual amount of oil that's being produced and moving into renewables. How important is this going to be for this sector, the oil sector, as we look out? Because I'm hearing, I think it's now engine number one has, I believe, this hedge fund now has 3 board seats on ExxonMobil, and they're driving really hard on behalf of the green lobby. And they acknowledge the fact it's going to be an expensive time for these companies as they transition into something that's more environmentally acceptable.
Absolutely. And let's face it, some of the big US names, as you say, like Exxon, have been quite slow versus some of the maybe European oil names who have perhaps moved a little bit faster with some of those shifts. So there's certainly a very big debate there. I think the first place to start has to be what on earth is happening with the OPEC markets at the moment, where there's the OPEC Plus meeting from earlier this month was kind of interesting, because you had a disagreement there between different countries, different country members there, in terms of their forecast focus on where they think oil prices should go. Because let's face it, oil prices at the highest level since 2014, in most scenarios, should be very positive for a name like Exxon. But yet you've seen a relative lack of performance of their shares over recent months, or certainly over the last year or so. So there is a big debate, because let's face it, the shift towards EV and other sort of climate change related matters is something which causes a lot of problems for these companies, a lot of change requirements. Many reasons perfectly justifiable, but clearly a different world than many of the great companies would have known back in the 1970s or 1980s or something. So there's lots of questions which will come out and which will no doubt be discussed over the Q2 statements. It's not going to be about how much profit they make. It's going to be, well, where are you going over the next couple of years? That debate hasn't gone away. And in fact, if anything, the fact that you haven't seen much share price performance despite the high oil prices of recent months kind of tells you that investors are starting to understand, well, it's more a question of how can these companies perform across the full 2020s and into the 2030s in a world where perhaps climate change is going to become hugely impactful across many different sectors, particularly this one. So this is why the big debate's there. I'm not surprised that you're seeing new investor types also becoming involved with the shares, because let's face it, there's a big debate there in terms of, do you start therefore playing a completely different sort of role, a bit like what you've seen for someone like in the European market, sort of a BP or a Shell or something, in terms of looking at their capability and much more enhanced capability in some of the EV and related areas, or whether you say, well, the best thing to do is just to try to focus what cash we can, pay special dividends and related, reduce any debt that we've got, and accept our business is going to get smaller and smaller. It's a good debate, and I'm not surprised that big active investors are moving in there to say, well, let's see whether we can actually make some big changes or not.
Finally, Chris, I want to move on to tech. Last but certainly not least, I mean, you talk about the potential for shrinkage in the oil sector. Tech, the horizon is big, wide, large, far off. You've got all sorts of tech opportunities that are out there at the moment. Broadly speaking, it's a fascinating area. What are your thoughts on the tech sector for Q2?
My first observation is that I was amazed to see that technology was so far ahead of all the other sectors out there in terms of the number of deals that were going on between different US companies. I find that amazing. The interest level still in technology is absolutely huge. No surprise to see the Nasdaq index and related at multiple all-time high levels this year. Huge amount of interest still. So the big problem for the sector, I think, is that the average investor, particularly the average American investor, already has a very high exposure there in their personal portfolios or their industry portfolios or whatever it might be. So there's a lot of expectation there. There is no doubt that the year-on-year numbers are still going to be good because we can still see progress in all of these names, be it Apple or Amazon or Alphabet or whomever you might want to say. It's about where you go next. Because as always with these companies, they're already highly valued. So in order for them to sustain that, they're going to have to keep on showing progress. Now, I actually think the interest level may come from what international exposures do they have. The States is clearly still a growing market for them, but let's face it, it's been a growing market there for quite a few years, and there's a little bit less growing left to be done. By contrast, if we go to an India or an Africa, sometimes even other parts of Europe, certainly the general emerging market world, there's a lot of scope there in terms of where they could go. Now, this becomes very interesting for a company like Facebook, for example, in terms of their potential to grow there. A company like Apple, for example, maybe has to start considering the fact that it's never going to be a big player in China, where I think they're industry number 4 now. And they have to just accept the fact that they're going to have to focus a bit more on the States or Japan or Europe, just because that's where their company always should be focused. For other names such as Alphabet, what can you do in terms of that push of where YouTube can ultimately go and how that can be ultimately mega influential within their overall sort of exposures? There's lots of underlying debates going on here. And this is what I think technology in the 2020s is going to be all about. It's clearly not going away. It's clearly going to be an important part of all of our lives all of the time. The thing is that that's changing though is the world. The emerging markets is getting bigger. And therefore the American companies, which can also have emerging market exposure, will actually be the most impacted, I think, positively over time. So I think that'll be a big underlying debate in this data and this update. Tell you what else, what I think might be interesting is what buybacks are you going to see? Because most tech companies now do have a strong balance sheet still, particularly in the sort of the Microsoft or Apple sort of area. So what are they going to do next? If there's no easy next way to spend a lot of money in terms of developing something, then maybe they need to do what we saw 20 odd years ago or so, which was a lot of buybacks starting to occur, much more than what we've seen in recent years. That's going to be a big debate and certainly something which will interest investors potentially, because let's face it, tech has been all about growth over the last few years and not so much about dividends and related. So that's something else I'll be looking out for. Certainly going to be an interesting area to look at.
Yeah, interesting Q2 as well. Chris, look, thanks indeed for joining us. Chris Bailey there from Financial Orbit, taking a look at the potential for Q2 and some of the sector-by-sector analysis. We're starting out on Tuesday, the 13th of July, with those big banks. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.